I'm planning the 100K party, and I'm thinking it's probably going to be New Year's Eve at my house. So I would be surprised if we don't go through 100K in November or December.
Bitcoin is setting up to break 100K. Checkmate, Bitcoin's lead on-chain analyst, is joining us live. Saylor might be buying right now, which would be one catalyst to push Bitcoin into the six-figure club. The US debt, it has hit $36 trillion. It's something we have to discuss, along with the bull market multiple. James, good morning. How are you today?
G'day, mate. Thanks for having me back on. Always good to be here.
It's always a pleasure. Last time everyone's like, you need to get James back on as soon as possible. And I've got a couple of questions from the audience to dive into a little bit later. But first, I think most interesting to myself and probably a lot of people out there is the US national debt has gone well over $36 trillion now. Look, what are your thoughts? This number's been going up basically for our whole lives. It looks like it's going to continue to go up forever. But does it get to a point where it just breaks?
Yeah, well, I mean, this is the perfect example. Like in Bitcoin, we always talk about number go up technology. This is the original number go up technology, being that the system simply has to continue to add debt to keep inflating. And it makes sense, right? When you actually think about it from a debt perspective, which a fiat system is based on, if you borrow money today and then you can pay it back with printed money tomorrow, that's great. That's fantastic, right? Especially if you're in charge of the money printer. So it's this really interesting dynamic where it has to continue to expand the money supply in order for the system to keep going. Because otherwise, if everyone's debts become too hard to service, the global economy shuts down. So it is the original number go up technology. And in many ways, it's the underpinning of why Bitcoin does what it does, because you can't print it. So, if you've got something that you can't print, you've got something that you have to print, which one's going to be more valuable? It's not hard to do the math.
Talking about math, let me just come up full screen. Bitcoin's at $89,455, and you are saying, you're comparing it with the debt number go up technology. It looks like Saylor could potentially be buying. Last weekend, we saw him put out a post like this saying, I think Saylor Tracker needs more green dots after that Bitcoin exploded up higher. What are your thoughts? Is Saylor buying? Does it matter if he is or if he isn't buying? And do you reckon we get 100K by the end of the week if he makes an announcement that he has been buying all weekend?
Yeah, I think it's really important to remember that for every buyer, there's a seller. Right. So, and ultimately that's what price is. Price is just the meeting of buyers and sellers at a particular price point. Saylor's buying has been relentless and breathtaking. It's really quite remarkable and impressive to watch. He has found in many ways an infinite money glitch, at least for the time being, really just arbitraging the fact that people in the bond market can't access Bitcoin. So he's giving them access. People in the equity market, wherever he has the ability to raise capital, he is essentially putting that money back into putting those opportunities in there for investors, traders, whatever, to step in and actually fund his venture of buying these coins. So it's a remarkable thing to watch. Now, whether we go over 100K, and again, it depends how many people are selling. And I did a report on Friday. I mean, we're always trying to look at the buyers and the sellers. And as an analyst, I have to, as a hodler, I obviously want number to go up. As an analyst, I have to look at things really, really objectively. If Saylor's in there buying 25,000 Bitcoin, some other guy sold 25,000 Bitcoin, right? That's just the nature of how these things work. Now, of course, if you have more buy demand than sell demand, the price will go up. And we have seen it go up. I think it's really important to know the markets trade in two different formats, really. They go from range contraction or consolidation, chop solidation, however you want to frame it, where the market kind of compresses. It realizes all those gains, people who are going to take profit and sell, and some people are going to step in. You get these consolidation ranges. The market goes to sleep for a little while. And from range contraction, you always get range expansion. And that's where we move to another regime or another price range. And with Bitcoin in particular, it has a very commodity-like behavior. Gold is much the same, albeit on a much slower time frame. You'll get years of Bitcoin, decades of of gold consolidating, and then it will reprice over many years. And for Bitcoin, you generally get, we saw 7-8 months, and then the market reprices. It just moves. And as we've seen, it goes really, really quick. And this is what a lot of people who say, oh, well, Bitcoin's too volatile and whatever else. Like, yeah, but it's volatile to the upside, all right? It gets more volatile to the upside. So volatility is actually a good thing. So whether we can get over 100K, I do think there's a very decent chance we can get over there. And we're a stone's throw. We're at 90K as of this morning, just below it at the moment. So could we get to 100K by the end of the year? Absolutely. Like it's a very feasible thing. Will Saylor's Buying be the one? Well, ultimately it depends if there's more sellers than buyers. So these are all the dynamics we've got to factor in.
Yep. I think you sort of answered this question that I'm about to ask in a roundabout way. But with Saylor, when he's buying, he seems to never move the markets until after he's bought. Like, how is that?
Yeah, so again, it comes down to sellers. And the truth is there are always sellers, because without sellers, you can't have buying, right? Otherwise, the price will move. So it's important to always look at both sides of the books. So on the report I did on Friday, I was looking at who is actually selling. And what we basically, there was a lot of long-term holders. There's about 320,000 Bitcoin from long-term holders. And the cool thing about this, you can't lie. The chain just is. So to be a long-term holder, you must have held your coin dormant for at least 5 months, right? So that's just the minimum. You can't fake it. You are a long-term holder or you're not. So we saw long-term holders selling on this rally higher. Now, what's really, really important to understand is that there's actually two different types of long-term holders. There's those that we would generally consider to be the hardcore hodlers, the stackers, the people who buy and they're waiting for long term. Now, generally speaking, within that long-term holder cohort, about a year, there's like another subset, right? And you can quantify these things, but there's certain limits to how much it's useful to do this. But if we look at like the long-term stackers, and for simple math, just think about that chop solidation range between like 55 and 70, that range. Let's call them like recent long-term holders, people who bought, but they're kind of happy with a 30, 40, 50% rip. And then you've got the people who bought below, let's just say 50K or 55K. On this rally higher, to my best estimate, there's been almost nobody who had a coin below 55K taking profit. So let's just rethink that. The coins below 55K have not moved. They are by and large static. Almost all of the sell side that we've seen on this rally higher, because obviously if there's no selling, we just keep ripping higher. All of that selling has come from the chop solidation range. So these are those long-term, they could be a hedge fund, they could be a dude who's rotating and trying to buy shit coins, whatever it is. The coins that are moving, that 320,000 Bitcoin, they have come from the chop solidation range. These are people who are willing to take a 30, 40, 50% gain. Good for them. You made some money if you want to consider fiat money. Some people will do that. It's part of the market, but they're not coming from the hardcore hodlers. So for me, right, I try to break myself into check the analyst, check the hodler. Check the analyst, see sell side. One sold Bitcoin is the same as any other sold Bitcoin, likewise for buying. Check the hodler is completely unfazed by this, because to me, all the other me's are not doing a goddamn thing, right? We're sitting tight and sitting on our stack, expecting and waiting for higher prices. I'm simply not interested in 90K. I need a higher number than 90K. That's for me personally. I'm not even remotely interested. It doesn't even cross my mind. There's a couple of traders out there who are more than happy to take 50% because that may have just saved their hedge fund from a pretty shitty year and whatever else they held.
Yep. That's pretty interesting that people under 50K aren't the ones selling. Do you reckon that's from them putting in the proof of work, and just because we went through that chop solidation for 6-7 months where we were just sideways, they had so long to be able to read the books, understand what this is, and maybe those people, it clicked that this is just number go up technology and Bitcoin is literally going up forever, where the newer people, because we're at like 58,000 for 7 months, they're like, oh, this thing's never going up, this is never going up, this is never going up. It goes up and they're like, oh, thank God, and they get out of there.
Yes, the lowest conviction, essentially you're looking at the lowest conviction people who probably bought like 68, and they, for most of the chop solidation, they were underwater, and they've finally got a breath of fresh air and they're like, oh, fuck, get me out of this thing. Right? That's the kind of cohort of people. And there's a lot of them, by the way. Like that's a very normal behavior. The thing is, none of this is abnormal. This happens all the time. And just to kind of paint another picture, the OGs, and when we talk about OGs, we're talking about like the real long-term holders. They took shitloads of profit in the chop solidation range, lots of it. So all the guys who bought at 68K and 70K and, bought the Trump pump, and he's talking at the Bitcoin conference and like, fuck, it's going to go up forever. Those guys, they were buying coins off the guys who've been around since 2012, 2013, 2015. And there were times in that chop solidation range. Why did we stay static for 7 months? Because there was hundreds of millions of dollars of old coins locking in profits through that whole process. And in September, somewhere around mid-September, you can see all this long-term holder sell side, it just dropped off to nothing, right? And from that point, we started moving higher. So again, the reason that we chop around is because these OGs, and like a lot of people go, 70K, why the fuck would you sell at 70K? It's like, because he bought at 200, mate, right?
Yeah.
He wants to go and buy a house. He wants to pay off his mortgage. For him, 70K is for the people who've been around since 2018 or 2019. That era for you is going to be probably 250 or 300, whatever it is. Everyone has their, like, I think American Hodl calls it their BitLife crisis, where there's a point where like you just don't, your typical DCA stack doesn't move the needle. Those guys in 2013, if they really did hold their coins, they need a serious source of demand. If you're going to take $10 million worth of profit, you need 10 million worth of buy side. And that buy side comes in bulls. It comes on all-time high breaks. It comes when the market's really, really exciting. And it's this distribution of supply. And by the way, this is what is really important about Bitcoin. The sell side is really important. If nobody sold, and it was just the cypherpunks who held all their coins and they never told anyone about it, Bitcoin wouldn't achieve network effects. You actually need sell side distribution and a widening out, a broadening out of the holder base over time for this asset to get network effects. So, number go up is great, but we've got to remember that for the buyers to come in, you need the sellers. And this is a really, really just important factor of market structure. It's why things take time. And the longer it takes, the more resilient and robust that uptrend will be.
Yep. One of the things, James, that we're talking about backstage before we came live is, well, there's two things actually that I'd like to dive into. There's going to be many tops this cycle, and the Bitcoin market is maturing. First, I'd just like to say good morning to everyone that is tuned in live. If you haven't already, hit the subscribe, the notification bell. I have linked James' check down below in the comments, the description, if you're not already following this man. But James, like many tops this cycle is sort of what we're talking about. I'd like you to explain that and how people can probably keep a level head through that. Because if there's a top, by definition, it means we're going to fall from that top before creating another top. I guess my biggest concern in this is so many new people coming in because Bitcoin's price is around all-time highs, which is great, built-in marketing mechanism. But if we pump to 120K and then we drop back down to 90, that could shake a few people out, which is pretty sad if we then go on to like 150, 200K or $1 million in a couple of years. I guess, how do you explain the many tops and maybe the best way to be able to navigate that, to be able to have more Bitcoin in a year's time than what people have now?
It's a great question. And ultimately, I mean, I do Q&As once a month over at the Substack. And one of the guaranteed, without question, I could just already have my answers pre-typed, because one of the questions is going to be, how do I find the top? When do I take profits? Blah, 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 blah. And for me, it's really about working out what is your goal and what is your plan. So knowing why are you selling your Bitcoin? If you're going to sell, why, right? And a lot of people haven't actually done this work of thinking about, why do I own this thing in the first place? And I'm a big advocate for Bitcoin. For me, it's my savings, and I use it to save for things that I want. What do I actually want? Right? For me, I want to buy a house. So Bitcoin is running substantially faster than the Australian housing market, which very few assets are. So that's essentially my savings vehicle. And for me, I'm not selling my Bitcoin. I'm trading it for something that's going to improve my life at some point in the future. And again, we're not talking about selling the whole stack. You'll have to pry most of it from my cold, dead fingers. But there's a chunk of it that I'm going to use to improve my life. And I think everybody should have that plan. If you don't know why you even own this thing, then what's the point? Having a plan, writing it down, and knowing why is really, really important. Now, on the topic of tops, there are going to be many tops, right? You could argue that Bitcoin's been in a 16-year-long bull market, right? Because the tops were just a temporary phenomenon, and away we go. What people are generally talking about is the bear market starting top. And through bull markets, the process, what actually happens, you've got all the long-term holders. And again, even if it's not your stop, it might be somebody else's stop. And that's why I check the analyst. I look at sell side. I know it happens. It does happen. Ignoring it is foolish. People do sell, and that's just a fact. And kind of coming to that realization is important. It doesn't mean Bitcoin's not going to get to $1 million. It just means the market has to finance some guy's mortgage who's been in for 10 years, right? That's just how these things work. So by my estimate, if we were to just imagine we just teleport tomorrow, we wake up tomorrow and it's at 120K, 125K. Statistically speaking, the average Bitcoin, the average hodler, the average guy is going to be in a statistically large amount of unrealized profit. Now, again, I kind of paint this analogy. I'm going to keep winding up your portfolio 200%, 400, 500, 1,000. How high do I need to go, right? 20,000. What percent gain do you need to go where you look at your portfolio and you go, it's a big number, isn't it? Maybe I should do something with this, right? Yeah. Every single person has their number. It could be millions, and that's fine, right? That's how it goes. Some people have a different level, but on average, statistically speaking, we will hit enough people with a big enough green number. If we were to teleport to 125, where I would be very surprised if we just kept going to 500, right? I believe we're going to get to 500,000. I believe we're going to get to 1 million. I believe Bitcoin is going to continue to do number go up technology because fiat has no bottom. But fiat has no bottom over time. And this is what a lot of people get wrong is they factor in, or they don't factor in time. These things take time to achieve, right? Bitcoin belongs at $1 million eventually, right? Eventually, a really important word because there will be many tops that feel like the top. There will be many corrections that feel like the end. There will be many bear markets that feel like it's over. But Bitcoin has this wonderful process where it just goes, well, fuck, you're over. I'm coming back, right? And it just keeps going and going and going. But there's a process. So I think just understanding that there will be tops, there will be the top, so to speak, and then the top will become the bottom of the next market, right? This is the process. So just understanding that this is how markets work is really important. And I think for the average hodler, my kind of general framework is what do I usually regret in a bear market? There's kind of two things. One is I bought way too many coins at too high of a price. And over the course of a bull, long-term holders transfer their wealth. Let me frame this another way. When you're shilling Bitcoin to your Uber driver, you're early. When your Uber driver shills it back to you, you're not early anymore. So when the market is full of Uber drivers, the probability of the top or a significant top is much, much higher. That doesn't mean that we don't keep going, but that's kind of the wealth transfer event that will happen. And you know what it takes is then a miniature bear market, a full-scale bear market, whatever it is, to just reset the balance back to the people who've read the books. They've done the work. They've done the study. They understand why they own it. And then there's no more Uber drivers left. And away we go once again.
Mate, talking about Uber drivers, when we were in Sydney a couple of weeks ago for Cheat Code, I was getting an Uber to the conference or to the pub or wherever it was to be able to catch up with everyone. It's like, oh, what are you in Sydney for? I said, oh, Bitcoin conference. He's like, yeah, I own some Bitcoins. I'm like, what do you mean Bitcoins? He's like, yeah, I got Bitcoin, I got Ethereum, and I've got ADA. And then he was like, started going down to the meme coins and stuff. I'm like, oh, yeah, that's interesting. How long you been here? He said like 2017 or 2019 or something. I'm like, well, and you're still holding those other Bitcoins, are you? He's like, yeah. I'm like, how would you have gone if you were just holding Bitcoin? He's like, I would have done much better, but these things are going to be able to pump and I'm going to be able to get all the Bitcoin that I missed out on. And like they're really great and they've got a lot of utility and stuff. So the reason I bring that up is because I had that experience, but he's still sort of like in the altcoin casino. But for people new into the space, there's this group of people called Bitcoin maxis, and they're like, if it's not Bitcoin, it's a shitcoin, everything else is a scam. Do you have any like messaging for friends or family that are coming into Bitcoin? Like they're coming into Bitcoin, say today, the Bitcoin Fear and Greed Index is at 90, which is extreme greed, which means you know there is a bit of FOMO in the markets. But I guess like how to keep a level head and not get distracted with the shiny object syndrome.
Yeah, absolutely. And ultimately, this is always going to be the case, right? People will always. What are shitcoins? In my opinion, they're fiat style products, right? When you talk about the utility, there's a whole rabbit hole here, and I've spent a lot of time thinking about it. But when you think about what altcoins are, the best way to think about them is that they're either like tokens to go to time zone, which is like your tokens, right? And then you've also got all these L1 chains, and they're the best analogy. And I think it's funny because they kind of had this Ethereum narrative way back that it's like digital oil. And strangely enough, I actually think that's the most correct analogy. If oil gets too expensive, what happens to the global economy? it shuts down because people can't run their cars. We can't operate plant. We can't use transport. This is the analogy of like gas prices will get, if Ethereum just teleported to $100,000, nobody would be able to use it because the oil price would blow up the economy, right? That's just the nature of how these things go. You actually can't have number go up over the long term because the use case, which is, moving shit around on chain, or I think I've even seen people saying we want to have fun on chain. It's like, okay, cool. We're getting closer to the source of the truth here. The problem is that these things actually can't sustain long-term value because the economy that they rely on, or that relies on the asset going up, breaks. So they're in this like really unfortunate world where they actually can't have sustained number go up over the long term. Where people get distracted is in the short-term stuff, where you do get these ridiculous rallies, right? Meme coins shoot through the roof, and shit coins will pump, and all these things. And people believe that is what they're here for. And the way I like to frame this up, there's a lot of metrics that I look at in the on-chain world, which trend higher in bull markets. And people go, "Oh, I should buy when this thing's going up." Now, what is this thing? This thing is almost always old coins locking in large profits, aka you are buying from someone who is much, much smarter than you that is selling. So that's the thing a lot of people miss. Yes, this metric goes up in bull markets, but the most bullish period is in the bear market when you've got all of the speculation out of the system, right? And very simply, why are people buying Bitcoin at $90,000 when you could have bought it at 15? Or 20 or 25 or 30 or 40 or 50, like there's all these levels where you could have bought Bitcoin, but they get attracted to the number go up in the very, very short term. And the problem is, if you ask any of those people, what is your edge? I think this is the most important question. Every single Bitcoiner should know this. What is your edge? If you can't write down what your advantage is in any market, you are speculating and gambling, and that's fine. That can work out in the short term. But for all the wins that you see on Twitter, there are thousands of people who lost their shirt. So ultimately, what is your edge? If you've sat down and studied Bitcoin, you've done the research, you've done the proof of work, you understand why Bitcoin itself is special and why all these altcoins aren't as special, right? If you go down that rabbit hole, that's your edge. You understand the asset that you own. You've battled the, people have been telling you that Bitcoin's a scam forever. For everything from mainstream media to your friends to your uncle, everyone says it's a scam. For you to have gone down the rabbit hole and come to this conclusion requires a lot of proof of work. And if you've done that, that's your edge. You can write that down and say, I know that this is why I'm here, and I know this is why I'm going to outperform. If you ask the Uber driver, what's your edge? Why do you have an edge in ADA or ETH or Sol? What's your advantage here? They probably won't be able to write that down, and they will be one of those thousands who lose their shirt because the smart money, who know there's a bunch of those guys coming in, are going to sell on their head. They're going to look at all these metrics going up. They can go, look, price is up. It's great. I'm getting rich. And they'll probably buy a shitload more when it's going up. And that's the exact wrong time to do it. So, this is how markets work. It's just the age-old story.
James, I like that question. What's your edge? For everyone watching live, whether it's on X or YouTube, let us know in the live chat. What is your edge with Bitcoin?
What is your edge?
I think for me, what is your edge? It's a simple question. For me, it'd be reading the book, So I Don't Need to Eat the Bugs. Parallel's a good one. Brian D. Mint, Beers for Bitcoin, Dasby, Seb Bunny. And then being able to speak to people like James. But a serious question, what is your edge out there? Have you been putting in the time and the effort? One of the other things that I just want to loop back to, James, is when you're talking about having a plan to be able to take some profits this cycle, if people are, I think it is better now. Like I'm here for the separation of money from the state. We're not in a position where anything really under $1 million is that interesting. But if it teleports to $500,000, yeah, of course. Like if it just goes there overnight, it's going to come back down. But I think now, before it gets too frothy, while we're under 100K, it does make sense if people think, oh yeah, next year I'd like to be able to take some profits. I don't want to ride the bear market with zero fiat dollars. What's a couple of like frameworks or things that can get them to think through creating their own plan? Should they DCA out, or should they have price targets that they should hop out at? Like, what's a systematic way to be able to do it instead of just waiting for it to be able to pump and be like, I'm just going to wait. It's at 120. I'm just going to wait for 150, and then I'm going to sell everything. What's maybe a more level-headed, grounded way of approaching?
All right, this is a great question. And so first things first, what are you taking profit for? And it can be, I want to buy this thing back at a lower price. That's perfectly valid. It could also be, I want to trade it for some lifestyle chips. I want to buy a house, get a deposit, put my kids through school, right? Take a holiday, whatever it is, whatever you want to take profits into, because at the end of the day, the only thing that's scarcer than Bitcoin is your time. And you only get one shot at this life. If you do not spend that time wisely, there's no point buying the Bitcoin in the first place. So in many ways, Bitcoin is secondary to your life. And I think that's probably the primary thing. So do stuff that's going to improve your life, generally speaking. Now, in terms of like a systematic way of how to know when we're getting heated. And again, this doesn't mean that Bitcoin's not going to go to millions of dollars. It will. However, in the immediate term, there's a process before we get there. So the way I like to think about it, if you've got something that is statistically improbable to keep going, it's probably not going to keep going. So there's a couple of metrics that I use. I'll just give a couple of examples. One of them, just really simple, the Mayer multiple, literally a ratio between price and the 200-day moving average. Now, the 200-day moving average is like, it's a really, really simple mean reversion model. Every investor and trader under the sun looks at it. It's a typical just like bull bear level. It's slow enough that it gives you the macro scale. It's not a fast, you're not trying to time perfect tops and bottoms and all that kind of shit. If price goes too high above the 200-day, right? And there's only like, let's say, I don't know, 5%. Here you go. Here's an example. So that red line up the top there, I believe it's 2.4. There's only been about 5% of all of Bitcoin's trading days where price has been that high, 2.4 times higher than the 200-day. There's only been like 5% of all days. That's 5%. That's not zero. It can keep going. But you've got a 95% chance it's probably not. So how do you get that metric to cool down? There's two ways. There's only two ways because it's a ratio of price and the 200-day moving average. Price can go sideways and chop solidate, and the 200-day comes up to meet it, right? Cools down the market because we're like reconsolidating and going through range contraction. The other way is that price can come down and meet the 200-day. So, at the end of the day, yes, we can keep going. But if there's a 5% chance that we keep going, the odds now favor that we've got either consolidation or a correction in our near-term future, right? So that's just the way to think. And there's plenty of these metrics. There's MVRVs, which is the same concept, except instead of the 200-day, you're looking at how in profit is everyone. And let's now just take a view and say, okay, Mayer multiple, there's only 5% of days where it's higher, pretty unlikely to keep going. MVRV, people are in a shitload of profit. They're probably going to start taking them. Probably unlikely to keep going. If you've got like 6 or 7 of these things lighting up like a Christmas tree, that's the kind of time where the Uber drivers are buying the most amount of coin. The smart money is going to be selling the most amount of coin. And it's the point when most hodlers are probably going to feel not so great 6 months down the line. If they buy a big stack when all those indicators are very, very high, the odds are you're probably going to feel a bit shit 6 months down the road. And that's okay. You will come back because Bitcoin is number go up. But for many people, probably don't sell your house and mortgage your house and buy a fuckload of Bitcoin when these metrics are at like 5% chance of still going. Just wait, just sit back and wait, allow the market to find its new level, and then you can start stacking. So the way I think about it in that chop solution range, a lot of my indicators I use during consolidations, I would rather buy my Bitcoin. Let's just imagine the price is going to 40K. Let's just imagine that's where the world wants it to go. I would rather have bought my Bitcoin at 56, 53, 50, 49, and then it goes to 40, than at 68 and 70 and 73, and then it goes to 40. So it's much easier to hold your coins and feel a bit better about everything if you're buying when it's low, not buying at the highs. Even if it goes lower, it's better to have bought as low as you can than to buy high.
Yep. And then I guess just to be able to dive a little bit deeper into the plan. So charts.checkonchain.com, I've linked that at the bottom. This is James Check's business. And there's a lot of charts and stuff. With the plan, do you reckon like it's best to be able to base that off like the Mayer multiple and the MVRV pricing bands, or better to, so like if it's in that 5% range, maybe that's a good time to be able to sell, or pre-pick price points, like say like 120, I'm going to sell, say for example, people want to sell 10% of their stack this cycle. Should it be like, of that 10%, which is 100%, 10% at like 110,000, 10% 120, 130, 140, 150, etc., or they wait till they get the Mayer multiple in that 5% range and they sell that 10%?
Well, this is the thing. So it's entirely up to every individual. And this is where having a plan and writing it down now, the best time to have written a plan was down at 15K. The next best time to have written it was 30K and then 40. The best time to have written a plan is to have it already written. So if you haven't got a plan, write it down right now. Now, it's really important to know that we can keep going. These metrics can do two things. We could get well and truly above those high bands. We also may not reach them, right? So understand, at the end of the day, think about who you are buying your coins for. So, you can kind of think about this from everybody responds to that, even the most hardcore hodler. And I use the example of Mt. Gox. The Mt. Gox guys, they probably bought their coins in the hundreds of dollar price point. They got their coins back 11 years later, and they were distributed at around 68K. Let's say you're a Mt. Gox dude. You suddenly get your coins back after 11 years. Your cost basis is $250. You get your coins back at 68K, and the price goes to 30. How are you going to feel? You're not going to feel like, oh, fuck, I'm only up like 20,000% now. What a shame. No, you're going to be like, fuck, I just lost 50% of my purchasing power. You are anchored, and human beings, we anchor to our most recent experiences because that's what's in our short-term memory. So now think about that framework. When you're buying your sats, are you buying them for 2030 check, 2050 check? Are you buying them for your future self and your kids? In that case, who gives a fuck what the price is? If you're buying your coins and you know that if you were to buy a bunch at 129K when all these metrics are very high, and then we went down to 80, would you feel a little bit shit? Probably, right? Doesn't mean that you're not going to be in the money eventually, but you're probably going to feel a little bit shit because you could have bought at 80. So it's just like, and again, we don't know if we're going to get to 80. This is the thing, accepting that nobody knows where price is going to go. Nobody can predict the future. No metric can predict the future. All we're looking at is probabilities. So in that regard, generally speaking, if you're DCAing in, DCAing out is also very, very sane. Because at the end of the day, we just don't know. None of us know. All we can do is say it is unlikely and increasingly unlikely that if we get to 100 and 120 and 150 and 160, and the faster we get there, the less likely it is we're going to stay there. We're probably going to correct, probably going to consolidate. So at the end of the day, it's just about understanding how markets operate and where you sit. Because I think one of the most important unlocks for me, markets are like the tide. You can't change it. You can't swim against it. You can't do a goddamn thing about it. The tide just is. The only thing you can do is predetermine what your decisions are going to be. If Bitcoin, you wake up tomorrow, it's 130K, don't worry about what the price is. What are you going to do? That's the only thing you can control. What are you going to do? And if the price goes down to 70K, what are you going to do? Right? Just think about those areas and what your decision matrix is. Because at the end of the day, that's the only thing you can control. The rest of it is all just information. We're all trying to adapt and evolve to it. What are you going to do? Write it down, and then you've got a plan.
Yeah, I love that. I want to bring this up, which was pretty interesting. He said it a couple of times. Plan B, he's creator of the stock to flow model, which is, statistically it hasn't been bang on, but especially last cycle, it's sort of like this cycle, the power law. It was the go-to chart model, whatever. But even plan B, this person saying all models are wrong, but some are useful. For me personally, I think anything that points up and to the right is useful, whether it's the price chart over time, the stock to flow, the power law, any metric. If people can see it and be like, oh, over time, Bitcoin goes up and to the right, that's useful, not to be able to trade. But like, what are your thoughts on all these other models and stuff? I know you're looking at on-chain, but power law, stock to flow.
Yeah, so I would take the other side of that equation. So when it comes to plan B, the one piece of advice I can give is that use either the mute and or the block button because you will get zero value from that man, unfortunately. yeah, stock to flow, even power law. The problem with these, I think they're both wrong and they're not useful. Because the problem is I can also just draw an arrow on my trading view pointing up and be like, that's about as accurate as it's going to get, right? Yeah, of course, number go up. But like, what use is that really? At the end of the day, what value is it? So, if your error bars are plus or minus $200,000, it's fucking useless, right? Who gives a shit? It's not going to give you any kind of edge. There is no edge in those things. And everyone's going to say, oh, well, this old mate's just trying to shill his on-chain data. It's like, well, the thing about on-chain data is it's all of us. If you're listening and you own a UTXO, you are on the chain. The chain doesn't lie. The time chain just is. All I'm doing, and it's not perfect. There's plenty of bugs. There's plenty of shit that's not exact. It's not supposed to be exact. The way I look at it, I'm looking at the mechanics, right? The actual, like, I'm an engineer. So the thing that fascinates me about on-chain data is there's a mechanical component of, look, all these guys are in a lot of profit. And then I'll look at my other metrics and say, oh, and look at that. They're all taking profit. Isn't that funny? All these guys are really, really rich and now they're cashing a little bit out. That's the mechanic, because what creates a bear market? Dumb money buying too many coins at too high of a price from smart money. So if I can see dumb money buying too many coins at too high of a price from smart money, that's useful because it's the mechanical thing that creates the bear. That's what actually creates the bear. Stock to flow is fucking irrelevant because it doesn't tell you anything about the mechanics. What it actually tells you is what are the dumbest people looking at, because they're the ones who get convinced by that's actually the reverse indicator of what you're looking for. So in my opinion, it is both wrong and not useful because I can also draw an arrow that just points up. I could read the Bitcoin standard and say, well, it's going up. Great. That's the edge you've just got from that. What are you going to do between now and then? And what does up mean? So, that's how I like to think about it. Don't be lazy, because it's very easy to be lazy. There's various other things. May multiple. It's the 200-day moving average. It's as simple as it gets. It's orders of magnitude more useful than a stock to flow model, which has got error bars of fucking 200,000.
Yeah. Talking about dumb money and then being able to see dumb money on chain, I'd like to push back a little bit on that, James, because, I know quite a few people coming into the space and they would be classed as dumb money, and simply for the reason that they have kept their Bitcoin on the exchange. And I think that is the dumbest thing that they could do with the best money ever. So there's two problems with that. Number one, if it's on the exchange, not your keys, not your coins, they have no control over it. But also, we don't see what's going on the exchange. It's not on-chain data. So first thing, I'd urge everyone to please get your Bitcoin off the exchange today. Last week and the week previous, trying to help people do that, and the exchange is really putting up roadblocks and making it very, very difficult to move large chunks of Bitcoin off the exchange all at once. Pretty big exchange as well. So be safe. If you need help, reach out to the Bitcoin Way. But the second part of that, James, is like, how do you, because we can't see it on chain. Like, we have no idea what they're doing. So how do you factor that into your equations?
Oh, this is a great question. And probably if you're looking at on-chain data, what you've just said is absolutely true. The coins that are on exchange, we will only see the exchange balances. We can't see all the trading that's going on inside. However, let's also think about this from another angle. When you're doing a population survey, you do not survey 100% of people. You survey a statistically significant subset, and then you say, can I take the behavior of this large group of people and now compare that and say, well, do I expect this is what's going to be going on elsewhere, right? Now, I've got a couple of metrics, and I won't go into the nitty-gritty details, but there's several on-chain metrics purely looking at on-chain data. I don't touch a single thing to do with options or derivatives or exchanges or spot, nothing. Purely on-chain data, profit and loss being taken. It looks exactly the same as futures funding rate, identical, it's the exact same chart. There's another one that looks exactly the same as options implied volatility, meaning the vol premium that's being priced into options. So how in shit's name can you have on-chain data only describing the exact same phenomena as people in futures and derivatives markets? It's because we're surveying our statistically significant subset is every single hodler who is transacting on-chain. Every speculator, every trader, every hodler, every sailor, everyone who is transacting. Are they going to have a sentiment profile that is approximately the same as the guys on futures markets? When the smart money is taking the fattest profit, When do you think that's going to be? It's going to be the most exciting high liquidity period of the market, which is the tippity top. And what's happening at the tippity top? The dumbest guy you know is going levered long on the futures market and paying a shitload of premium in order to do so. They're telling you the same thing from just different perspectives of the market. So yeah, you're right. You can't see what's going on inside the exchanges, but you'll see in my analysis, I look at on-chain, I look at spot, I look at options, I look at futures, I look at the ETFs, because they are all statistically significant subsets. And when they all speak the exact same language, that's information, right? That's not noise, that's information. When every single metric is telling me people are giga bullish, people are taking lots of profit, people are paying lots of leverage in futures markets, people are betting on way too much upside, it's probably not going to go up, right? Like that's the way I think about it. So you're absolutely correct, but it doesn't actually matter. As long as you know how to reconcile all these pieces of information, you actually have a very, very clear story, and that's where the edge ultimately comes from.
You're a smart man, James. Hey, everyone, I have linked James below in the description. Follow the man, one of my favorite people within Bitcoin. I've got this post, and I want to dive into the ETFs very shortly. But before we do, this is a comment from George. James has helped me understand the basics of on-chain and its use and buy and haven't sold yet lol Bitcoin more than any other source. But I want you to ask him about the recent smash buying starting on the 9th of November, and it feels like it was indeed a nation state, also 4-year cycle. So there's two questions there. That smash buying that we had, 10 days ago, 9 days ago, just over a week ago, did you see anything peculiar on chain?
Yeah, first things first, I love George. George is, I met him in, I think it was in Miami in 22. Great dude. He had a recent podcast actually. Yeah, he had a recent podcast actually with Robin Sayer, who's also kicking ass. So make sure you follow both of those guys. So yeah, it's really, really important. So on that rally higher, my opinion is I don't care if Saylor buys, I don't care if a nation state buys, I don't care if an ETF buys. One bought Bitcoin is one bought Bitcoin. And I don't particularly care too much about surveying who it actually was, because at the end of the day, price is the result of buyers and sellers meeting at some level, right? So in my opinion, the rally that we saw coming off the Trump and the financial media is going to say, oh, look, Trump election creates bull market and rally higher and blah, blah, blah. No. 7 months of chop solidation of OG selling to new people who stepped in, accumulated those coins. We had a true, as you'd say in Australia, fair dinkum consolidation phase, and that baked in the cake the rally higher. If you didn't have that 7 months of chop solidation where coins transfer to stronger hands, you don't get the rally higher. So this is also why a lot of people will look at, there's all this commentary about the bull market multiplier. How much, if you put $1 in, do you get $100 worth of capital out the other side in market cap change? No, you don't. Because the thing is, without the 7 months of price going nowhere, you don't get the rally where price goes somewhere. The ETF, the multiplier on the ETF flows is not 38, Fred. It's not. You know why? Because the ETFs are not the majority of the market most of the time. They're a very significant component, but the ETFs are not the only part of the market. People seem to forget these ETFs have gone live and everyone's like, oh, the ETFs are the only thing. It's like, guys, what about the fucking spot market that's existed for 15 years before the ETFs? That just disappears, just gone? No, of course not. There's a whole world of factors here. Markets are very complex and dynamic beasts. It will only get more so as Bitcoin gets bigger. So no, the multiplier is not 38. It's not 100. It's definitely not 200. At most, by my estimate, it's only ever got to 8 for a fleeting single day. So it's usually between 3 and 5. In bear markets, it's much lower than that because there's an oversupply of coins. There's not enough buy side. You need a lot more capital to move the market. But the multiplier is a dynamic thing. There is no perfect way to measure it, but it is for sure as shit not 100x. And anybody who's saying it's 100x, like Plan B, mute and block is a wonderful tool because they are not adding edge to your day.
It's so funny that you said the word dynamic. I was literally writing that word down the moment you spoke it. But you're saying you don't care who is buying. Like, if there's different cohorts of people buying, like, say, for example, a nation state, aren't they going to change the market dynamics? Aren't they going to act in a different way? And I guess, like you may say, well, that's not statistically relevant, but say a nation state comes out and they buy 1 million Bitcoin or 100,000 Bitcoin or something. That's one person holding a big chunk of Bitcoin. Like, I guess, how would you answer that?
Yeah, so I mean, at the end of the day, they were the hodlers of the old days, right? Hodlers used to buy, and you got to remember that at what are we, $1.8 trillion now, 1.7 trillion. Retail, the average hodler can get us to 1.2, 1.4 trillion. We can't push this thing to 10 trillion. Retail simply do not earn enough money globally to push this thing to $10 trillion. You need big capital to come in. Now, okay, you've got a nation state who's buying for the long term. We used to have hodlers buying for the long term. The difference is the price was 6,000, not 60,000 or 600,000. The bigger the market gets, the bigger the hodler needs to be. So in a way, it's literally just a handing over of the baton from one hodler to another. You know, it doesn't really matter who buys this shit, because at the end of the day, Saylor is just what the cypherpunks were and the libertarians were and the early adopters were. Saylor's just the most recent addition who, yes, he's got a bigger pocketbook, but he's also buying Bitcoin at $60,000, $70,000, $80,000. So you need bigger hodlers to push a bigger asset. So in a lot of the work that I do, I try to just give like the engineering interpretation. You've got this like funky looking ratio and you're like, what the fuck does that mean? Most of the time in the numerator, you've got like the disturbing force. And in the denominator, you've got the size of the object that you're trying to move, right? So if the object is if it's a much bigger rock, you need bigger guys to move it. And that's ultimately how I think about it. So at the end of the day, the dynamic is exactly the same. They may be hodlers. They just have a money printer as well.
I always love talking with you, and I want to dive into Checkmate, James, and what you're doing. You know, I'm not a trader, and you know, I get asked a lot of questions. I'm like, yeah, if anyone's serious about trading or they just want to be able to learn, you need to be following Checkmate, not looking at the stock to flow, not at the power law. And I agree with you on the power law, stock to flow. However, as a marketing tool, same with an arrow, Matt. Same camp. But I also think if someone draws an arrow and someone believes in that arrow, that's helpful. If they're going to spend time in the markets due to an arrow because it goes up and to the right over time, like that's great. But before we do,
the only counterpoint to that, what happens if they're drawing the biggest, fattest arrow when it's the most exciting? What you actually end up doing is burning people. And when you burn people, you actually lose people. Now, of course, every hodler buys the top. We all buy the top eventually.
Yeah.
But should we be recommending that people buy the top? Probably not, right? Probably not. Yeah. We should probably, we can all go through that journey and everybody will experience a red candle eventually. But maybe don't recommend people buy when it's the most green, because that's what hurts people, right? And we got to consider that as well.
Yeah, no, that's good. And I agree. So everyone, I've put James' details below. Definitely make sure you follow on this man, especially on X and checkonchain.com. That's there. And if you haven't already, hit subscribe for my channel. You will get the news with the fast facts, special guests like this. But James, I'm going to bring this up. And if you can just probably the charts page is nice. Explain like what you're doing with Onchain and like how people can find more information. Go. I'll remove myself and hand the floor over to you.
Yeah, for sure. I mean, ultimately, my thesis was that most people come into Bitcoin, they think they're a trader, they get burned, they realize they're not a trader, they realize they're a hodler, they do the proof of work, they understand why they hold Bitcoin, but it is a volatile beast and it does move in strange and peculiar ways. But also, it's like an exercise of learning about how the world works, right? We all go through the proof of work. And my kind of core thesis was that the average hodler still wants to understand why the market's moving. They want to be able to make more confident decisions. They want to just understand, are we like overheated, underheated? Where are we? Why did the market sell off? I'm not selling because it sold off. I want to know why it sold off. So we try to go down the path of saying that we're your Bitcoin personal trainer. And the idea is you got to go to the gym, you got to do the sets, you got to do your reps, because that's what gets you prepared for the fight, right? You don't start training for the fight 2 weeks before it happens. You start training 6 months or 12 months before the fight kicks off. So that's what the kind of original impetus was behind Checkmate. We've basically got two main products. The first one you'll see at the top there is our charting website. So the charting website is fully free. Everybody can access it. all the charts you'll see me do my analysis on, they're basically charts that I have built for me. That's what this is here. So you'll be able to get pretty much any Bitcoin chart you could possibly want. We're rebuilding this at the moment, so there will be a new skin on this by the end of the year, which I'm very excited for. But essentially, it's a fully free resource, updates once a day, and you'll get all the Bitcoin charts you could possibly want. And then we have the newsletter. And the way I like to think about these things, everybody can see the charts. But if you want my expertise, my time, and I love doing this research and analyzing the markets, what I enjoy doing, the time that I put into that and producing research reports, analysis, we do 2 a week, written and video. So if you prefer written, you prefer video, half of our users do both. So you get a half-hour video twice a week, plus a written report. Helps just understand where we are, put things into context, understand what I'm looking at, so you can then just factor that as one of many pieces of information into your process. So in many ways, I want to try and transfer the edge that I think I have to as many people who are willing to listen. And ultimately, I think a lot of hodlers they want to understand why. And I try to help answer to the best of my ability why.
Yeah, mate, I think what you're doing, like the free resource and then your newsletter as well, I've linked it below, but just check onchain.com. I know you're not really doing your YouTube videos anymore, which is a little bit of a shame. I absolutely love that. Lead on-chain analyst for Glassnode. I guess just for everyone watching, James has been around for a while now and has really dived deep. And so if you want free signal or you want to join the newsletter, definitely a nice way to be able to stay grounded. So I started this live stream off with Bitcoin could potentially go to 100K by the end of the week. And we're, $10,403 away from that happening. Like it could happen in the blink of an eye. When we hit 100K, whether it's this week, next week, or we need to wait until a Santa Claus rally, I reckon we'll hit 100K and stay there, or it's just going to be a wick up and we're going to come back down to where we are before we go higher? Or do you reckon we're just going to have chop solidation again for another 7 months at $100,000?
Yeah, it's a good question, and I don't have a full good read on it. My expectation, we probably will hit 100,000. I mean, I think 100,000 is not, let's go back to 50K. 100,000 feels like a long way away, right? And you look at the price behind your head, it doesn't feel that far away anymore, right? And I spent the weekend just kind of processing, is Check the Hodler still a buyer up here at 90K? And I ultimately ended up settling on, I think I still am, right? Because I don't believe, we're obviously not deep value, right? I think everyone could agree we're not deep value anymore. However, we're probably not at the end of this bull. I would be very surprised if 93K ends up being the all-time high for some kind of, horrendous 2-year bear market. I'd be very surprised if that's the case. So I do think that 100K is very, very reachable. On a meaningful time frame, like 2-3 months, it wouldn't surprise me at all. If we get up to 120, 130K, there'll be a lot of metrics that are kind of a bit steamy at that point in time, like really getting into the upper bounds. And that doesn't mean necessarily that the bear is in play. What I think it means is that we probably will have a period of consolidation, chop. And you got to remember that the faster something happens in markets, if we just rip there tomorrow, there's a saying that I don't know who I got this from. I went actually looking for the original author and ended up finding some gold website that had quoted me saying this. So I couldn't actually find the original author. But the bull market authors the bear that follows. And likewise, the bear market authors the bull that follows. And the way you can think about that, if you have just a ripping bull market and we wake up tomorrow and we're at 500,000, I would be I would be expecting that we probably come back down here to like 100. So that's, I think, the way to think about it. If you just go super hard, super fast, you're probably going to have a super hard, super fast move to the downside. If we rally, consolidate, like in this like stair-stepping pattern, bears can fuck off because they're going to be wrong, right? I think if you get this really stable, robust, resilient uptrend, which can't go on forever, usually you get some kind of euphoric wave come in. But if we like stair-step higher over time and we build these bases, it's much more likely that we just keep going higher and higher. And, we all expect Bitcoin's going to continue to go higher and higher. It depends on the process, right? There's a path dependency on what that journey looks like.
Couple of things that I want to bring up to be able to wrap it up. Like last cycle, we have had FTX. We also had the China Bitcoin mining ban. Do you think, number one, are we going to see more exchanges go bust this cycle? And could we see something like that, like another black swan event? And by definition, we don't know what a black swan event is, but could we have something, say, in 6-12 months, even shorter, that just absolutely kills this? And we do need another 2-3 years before we start to go back up again.
Yeah, so I think if you really like take a step back and say what created the 2022 bear market, in my opinion, the 2022 bear started in May on that first sell-off, the China mining ban. I also believe the China mining ban was just the match being thrown on the fire that was already built. The fire that was built was because GBTC sucked up 660,000 coins in 4 months. The premium went to a discount. That bid evaporated, and you had a whole bunch of leveraged funds, investors, traders, the 3 arrows of the world, really, really underwater. So that first sell-off in May 2021, I believe, is what killed the bull. We then had like a fake bounce up to the new all-time high, and then we had a horrendous bear, which had the deleveraging of Luna, right? That was 80,000 Bitcoin just market sold. We had 3 arrows blew up. That was several $1 billion that just evaporated. We had FTX that collapsed, and they didn't have any Bitcoin at the end of it. So you've got all these dynamics. That's like a GFC. TXMC has described this as a GFC for the market. I think that's about right. Do I see that showing up again? I'm not saying it can't happen, but I think it's less likely. So therefore, my opinion is that we're probably less likely to have 80% drawdowns. I think the drawdowns will be less severe moving forward, because we're going to have all sorts of factors like, investment managers, Bitcoin doubles. They've got to sell down their stack, which kind of caps the upside a little bit. But then they've also got to buy it back when it sells off, right? They've got to keep their 1, 2, 3.5% allocation. So they've got to buy it back when it goes lower. So I think you're going to have this like softening, generally speaking. I don't think we're going to have one of these big, massive unwinds. That said, the risks that could create that, I don't think we're going to have exchanges so much so be the kind of catalyst for these things. I think if anything, we're probably going to see banks start becoming the exchanges and acquiring and taking over those entities. I think that's more likely. What concerns me a little bit is we get too many Saylor copycats. Imagine some zombie-ass companies that go, oh, well, Bitcoin's my ticket out of this shithole that I'm in, right? GameStop goes and buys a bunch. Yeah, GameStop goes and buys a bunch of Bitcoin. The problem is that these entities do not have the stones and the chops and the business model and the experience that Saylor does. So as a result, they can be pro-cyclical, just like miners. Miners can be pro-cyclical. They buy and hodl way too much in the bull, and they end up puking all of it out when you get to these low prices and the shareholders spit the dummy. And I think we can have some pro-cyclical selling on the downside. So I kind of don't want to see too many Saylor copycats personally. Having a Bitcoin reserve asset, yes. Having a Bitcoin only as the only thing I'm going to do is my business model, I'm less keen on seeing that play out, because I just don't think the market and these companies and these CEOs, they're not Saylor. So as a result, I think that's like a get out of jail free card it's like putting .com in your name or putting blockchain in your name, whatever it is. I think that's like a bit of a get out of jail free card, and it does concern me a little bit.
Interesting. So I've got 2 points, and the first one, I'm just seeking a little bit of clarity from you, and it may help the audience. You said it could still happen like a 3AC or FTX, but probably less likely with the exchanges. My biggest belief with Bitcoin is you have to take control of the keys. You have to get it off the exchange. If you don't do it, it's not your Bitcoin. You have an IOU, maybe number go up technology, but you don't own Bitcoin. Just for a little bit of clarity, you're not saying that the exchanges are safe and people should leave their Bitcoin on the exchange?
I fully agree. However, so let me take you back to when FTX blew up. I always take there's a big lesson that I learn from there's lots of lessons, but one of the big ones that stuck with me when FTX blew up, it was, okay, that's it. The feeling that I saw when the price just tanks and FTX is blowing up, the feeling that I had was not one of, oh my fucking God, like complete dread where I've lost all my coins. There was this like calming factor. I was like, okay, it's obviously not great, but it's just price. It's a pain in the ass. It'll come back. It was a very calm sensation because my cold card was doing all the work, right? It had all my coins. I lost nothing in that event. And, in many ways, it offered a buying opportunity rather than a point to panic and shit the bed. So I think it's so important to have custody of your own supply. Now, what I will say is, again, I like to keep things realistic. As much as I 100% align with people taking custody of their coins, I think we also have to just be cognizant that there is a large majority of human beings who will never take custody of their coins for one main reason or another. It could be because, quite frankly, the Bitcoin network cannot support at layer one everybody holding a UTXO. The fact that you have UTXOs is actually a real privilege because most people in the world will never have one. We will get to an environment where the chain simply can't, technologically speaking, have everybody hold one coin. If all 8 billion people wanted to send one transaction on the Bitcoin network, it would take 67 years to process them all, right? So it's impractical and unrealistic to expect that most people want that kind of responsibility. This is where I think things like multi-sig, right? The Bitcoin advisors of the world, I think this is why this is really, really important, because people, they need the technological help to hold their Bitcoin. But also we have to also be very cognizant that we will have an era of Bitcoin banks. I do think that this is a realistic, not the world I want, but the world that I believe is unrealistic to pretend isn't going to happen. The majority of people do not want to hold their coins and bury them in their backyard on a cold card. The majority of people do not want this. So there will be this evolution of how custody works over the long term. So I think just being aware of that, if you are in the privileged position of holding your own UTXOs, you absolutely should. But also we have to remember that the world isn't going to play out with everybody holding their own UTXOs. We just have to be realistic about that long term.
Yeah, I agree with that, and definitely a shout out to the Bitcoin advisor. You know, headed by Peter Dunworth, absolutely amazing man. Somebody that I've called up many times to be able to help me with many things. He's a great guy.
He's brilliant, great business.
Really great business, and the Bitcoin way, the channel partners, whatever it is. Learn how to do it while you can, while you have that opportunity. I also agree, not everyone will do it or can do it, but there's the education for people now that have been here for a while. 100% I believe you should. Just talking about banks, and then I've got one last point to wrap up, but like Saylor could potentially become a Bitcoin bank, and I don't see that as being the worst thing. You know, Larry Fink's sort of moving in that direction as well. JP Morgan is starting to change their tune just that little bit, warming up to Bitcoin more and more. You know, Larry Fink calling Bitcoin a flight to quality. So there will be them, I guess, over like at the moment where we've got exchange, we've got the ETFs if people aren't willing to hold in self-custody. Is one safer than the other for the people that are just not willing to give it a shot? Like, should they go into the ETF or should they just leave their Bitcoin on the exchange and hope for the best?
Yeah, so personally, I would be more aligned with the ETFs than leaving your coins on an exchange. I think that's a more sensible approach. You know, and for me personally, I own some of the ETF in my retirement account because there's a few reasons. The first one is that's actually a diversification of my custody setup because I've got self-custody of my supply. So therefore, I kind of want in another bucket where it's actually self-custody. And I chose Fidelity because they've gone down their own path of actually building their own self-custody. They're not all holed up at Coinbase. I wouldn't leave my coins on an exchange, your Coinbases and your Binances of the world. I wouldn't do that. I think the ETFs are a superior option in that regard. And you also have to remember that these entities, sure, you may not get your Bitcoin back, but you'll probably get your dollars back because they have bailouts behind them, right? BlackRock's not going to go insolvent. This is not a thing that's going to happen. They have the infinite money printer behind them as well. You may not get your Bitcoin, but you probably get your dollars. If you lose your money in an exchange, you're probably not getting anything. So, you know, there's all these different dynamics to be aware of.
James, I always love your very level-headed analytical approach. Again, everyone, I could not urge you enough. Follow James Check. He is just an absolute legend. Thanks so much for your time. We'll make this happen. But I think, you know, for the rest of the year, if we do get a Santa Claus rally, if Bitcoin hits 100K beforehand, either way, it's going to get pretty exciting. I just urge everyone to read the books and come up with a game plan, whatever that is. Maybe you're going to hold this whole cycle. That's cool. Write it down. Maybe you're going to sell 10%. That's cool. Write it down. But just prior preparation prevents piss poor performance. But thanks so much, James.
Good on you, mate. Thanks for having me on. This was a fun conversation.
Cheers. Thanks, everyone. Bye.